yesterday with the fact that there was going to be some more upside. And look, honestly, I'll happily admit that I was incorrect. I was thinking that we would have a little bit more subdued action, maybe poke through that 93.50 level that we recently saw, and maybe into the 70s. But as you can see from the daily candle, it really did shoot up. We got to 94.40 nearly. Yeah, it was 94.41. Now, what I've done here is I'm gone to the weekly now. So this gives a little bit of context as to where we are. And what I like to look for is, space to the left. So if we poke out here over, 95.50 or so, which was the highs, seen back in, this was last year. This was the 20th of September, the week ending the 20th of September last year. So we're talking 12 months ago is when we were around here, and then there was a pullback. And then what we saw then was that significant rally in the US markets, and it was, particularly bullish. And now we're back up here again. So it's going to be a point to focus on. But anyway, what I'll go to now is the news. So we've got the Forex economic calendar here, thanks to Forex Trading Asia. And just remember as well, guys, with this, it is a free site to register with. Once you do, you log in, you like articles, and you can accumulate points as well. And that will, once you accumulate enough points, you'll be able to redeem an Amazon gift card. So you earn while you learn. Now, let's go to the Wednesday news here. All right, so now yesterday there was a lot of, and Kim Hong mentioned this in the LCMS Traders Club in the trading chat, there was a lot of commentary. Everyone was speaking from the central banks pretty much, except, Australia and New Zealand. But there was a lot of that. And one thing that we were discussing before the call, Ed, was there anything, worth mentioning? And, one thing that did come up, which was Jerome Powell did mention, still inflation is transitory. So that was, mentioned. But frankly, what we saw in the markets was that the US dollar remains, the king currently, and it's hard to ignore. Now, for today, so it is Thursday, and we're focusing on the yen. So let's just have a look at this morning. So we did have industrial production month on month. That came out, that was significantly down. And retail sales were also, significantly down as well. It was forecast to be -1, and it was -3.2. And then the previous month was 2.4%. So, I mean, this is a year-on-year figure, but it's definitely, COVID is still very much relevant in Japan as well. And it seems that, retail sales are struggling. So we'll go through now and just see what else is going on. So in regards to the yen, what we do focus on is the pound yen, the euro yen, and the USD yen. So very much relevant is also focusing on the pound. And, if we have been monitoring that as well, and it's been offering some really nice setups, but frankly, it's been, really sold off. So what Jin did mention yesterday was this GDP figure, the quarter on quarter for the second quarter, 4.8% is expected. That's going to be one to watch just to see if we can see a slight decrease, because everyone's talking about the reversal on the pound, but we just want to be cautious and just wait and see where it goes. Because once you're in a trend, it's very easy to get run over by taking a reversal trade. So I just want to go down now and also mention we've got the GDP for the US as well, and we've got that coming out at 8:30 tonight, GMT +8. But I think what I'll do now is go to the charts and just give a little bit of structure here to some potential trade ideas. So with this in the back of the mind now, with the US dollar chart up here, let's go to the USD yen. And this has been a talking point as well. And I'll just zoom in a little bit, and let's go to the 1 hour, and I'll just restructure this a little. So this has been a nice trade. A few of the members have caught this on the upside, and now it is coming back down again. This was mentioned yesterday as a little bit of a bonus by Jin as well. So points to pay attention to. We've got around 30 pips or so away here is the 111.56 level, which has been a recent level of support. And we have again the US dollar very extended, but there's a reason for this, and I will discuss that as well. But from a trade idea perspective, it's in the middle, pretty much in the middle of two levels. We've got the 112, which is resistance, and then we've got that 111.56, which is been seen as support. So we are closer to that level at 112. So my thought process is, let it come back up again. There's no point really, if this trades sideways, there's no point just sort of jumping in there because the probability is not in your favor. So let it come back up again. If the US dollar makes one more push to that top, that's, you know, a 12-month high, and then wait to see what happens there. And then if we do see some downside, entry at 111.90, and then at least there, you know, this is a short-term trade though as well. So we've got an entry at 111.90, and that gives us, you know, around 35 pips of take profit, and then a stop loss of 20 pips. So again, though, this would be for someone who's happy to scalp a position and it's a short-term trade. But again, guys, what I'd really like to see is it really break out again and come back down. But for now, we might see the US dollar start cooling off a little, but that needs to be dependent on what happens with the US 10-year Treasury bond yield as well. So I'll update on that as well in the chat, but that's currently over 1.5%, which just means that's indicative of US dollar strength if we do see that US 10-year bond yield go higher, but it's not currently. So we have to sort of wait and see what happens there. So that's the trade idea on the USD yen. Now let's go to the pound yen. So the pound yen has also been offering some nice trades as well for the members in the club. Now we are closer to that resistance level there. So we've got coming up here is 151 flat, and that is, as we currently trade, it is still around 60 pips away. So this is going to be more of a patience trade. And now you're probably coming in and saying, well, Scott, we could just play the upside. The reality there is, even though we have seen, there's been a little bit of support down here as well, I would say, let's just see what this does. We've got around, you know, 2.5 hours or a little bit more until that GDP figure comes out. And that's really going to drive, you know, the price, honestly. And that's going to be what we need to wait for. So let's say we do see it come back down again, and then we come down to around the 150 flat area. I'll just readjust this. There we go. So we come back down here and then wait to see what price action does. But the problem is, though, that's not really a significant support level. So really the safer bet would be, let's say GDP comes in at target at 4.8% and it hits that 151.00 level. We are still seeing a lot of uncertainty in the pound as well. So what that might mean is that a lot of people might get sucked into that play. Oh, GDP is good. And then what will happen is that will be a nice opportunity then to short it. Because then let's say the entry is at around 150.90. And then you've got, you know, I'm not suggesting we're going to see it come way back down to 148.90. But if you've got a 30 pip stop loss, and an entry at even at 150.80. So we've got 150.80, and then we've got 30 pips stop. I mean, at least 90 pips until we get to that recent level of support there is my call on the pound yen. Would be 150.80 as an entry, 30 pip stop loss, and then a 90 pip take profit as well. But be cautious again, guys, because we are seeing the markets really flip-flop in regards to, you know, the yen coming up with a bit of strength. And if equities do bounce, that is going to see the yen weaken. But it is looking like there are still some concerns in the market. And then finally, we've got the euro yen just to discuss. And I'll bring that up now. So euro yen, this is a bit more of an imminent play as well in regards to where we are with the levels. So it's been interesting. President Lagarde from the ECB actually was a little less dovish than normal. And we have seen the euro yen come back up again. And obviously, the thing is now we're close to this 130 flat level. And the euro itself has been a little more challenging than other pairs, although the pound short has made the most sense. So with this here, and again, it's just dependent on how the price action reacts. You just really want to wait and see if it can come back a little bit closer. And there's been a lot of chatter out from the ECB as well. And we've just seen it weaken, break through. I'd like to see it come back and just see if it can touch or even break above the 130 flat level and then come back down again. But again, it's just going to have to be dependent on how things play out in the European session. But you do have a lot of downside as well, because let's say price does come back down and we enter at 129.80. There's a lot of downside. I mean, is there upside? Well, there is, but the markets have really not been in favor of taking the euro much further above this 130.40 level. So I would say show some caution if you are looking to play the trend. It's looking like it's a little exhausted as well. So an entry at 129.80, I'd like to see actually probably a 40 pip stop loss just to survive any push high that we've seen. So 129.80 is the entry, 40 pip stop loss, and conservatively around an 80 pip take profit as well. All right, so those are my thoughts on the euro yen. Now quickly, I'll just touch base with gold here. So gold has been interesting, and I saw Kim Hong answered a question from one of the members in the private forum in the club about why gold is actually doing this, considering the uncertainties as well. And it's really, like he mentioned, to do with the 10-year bond yield. And simply what is happening here is that we're seeing strength in the US dollar because of that more rapid interest rate rise than has been expected. So the global economy, besides Evergrande, which seems like the Chinese government are just forcing other companies to buy assets. So that's going to be, frankly, it's going to be absorbed, it looks like, internally, those issues for now. So with gold, to be honest, you just have to wait and see what the US dollar does. I mean, if you've taken a long already and you're in a longer term play, that's what we're looking for. So, I'm not suggesting it comes back down to 1672, but we really, honestly, I'd like to see how this week plays out, first of all, and if we can see the US dollar break out. So I am looking to buy gold, but I'd like a better price here. And I think we might see it rally a little bit as the US dollar weakens, but then into next week, we could see another push on the US dollar. Like I showed, there's a lot of upside there. So wait for now, and really back down to the 1700s is what, I'd like to see on gold before, a position is taken there on a long.